I'm going to show you an easy way to get better with market structure. We're on silver. I'm going to go through how I mark up my market structures. I'm going to show you quickly my supply and demand, my imbalances, okay, my liquidity in the market, how I look at sweeps. But the main part of this video is to show you on silver how you can get better with market structure. So when we look at a blank chart like this, forget about the colors on the chart. That's something completely different. But we look at a blank chart, the quickest, easiest way is to visually look for that trend, which we can see is bullish. Okay, so the market's been moving higher slowly. So as we can see that, now we need to start marking up those structures. The way we do this is we look for the last break. We have a break here to the upside of structure. And then you can see the market rallies away. We have a small sweep. Now, I'll mark the sweep out just to show you. We had a small sweep here, pulls back into demand, and then we run for this high once again, and it's another structure break. So we have a bullish bias, and we pull back into this area of demand here. Now, if you're not sure about supply and demand, we have this area of demand here, price pulls back into and then runs through the high. Now, if you're not sure about supply and demand, there is a full playlist in this channel. Okay, I'll leave a link above now for you to go and watch after this video on supply and demand. But price holds here, and then we internally shift back bullish and run this high. So now we've done this, we've now got a new area of demand here, but we've got a area of demand here which may well hold price as well as a rally base. Okay, so there's your rally up, base sideways, rally up. Let me just show you this. So we have a rally, base, rally. Okay, so this area of price action could potentially hold price once again when we pull back in. Now we could just run completely lower. We don't know. We cannot see into the future. We just read what's happening at the time. So based on this, we now have a bullish bias on the monthly time frame. Okay, so you understand this is a sweep. Now when we have a sweep like this, very often they're going to run the previous low where it came from. Okay, so we can see the market want to run back for where the sweep came from. So what I mean is we see the market make this higher low, and we push up higher. The market's very often going to push for that. Now, the reason we know this is when we see a reversal in the lower time frame here, come back to near a supply, we could run to target that low. And that's internally understanding how to trade the pullbacks. This is showing me no, and I'll quickly show you with the arrow. We have a break up, pull back, break up. That's our current move. Now we don't have to pull back here. We could stop where we are and we could rally higher. Okay, and then this continues on with this swing move. So our swing structure here is bullish. And we also have internal structure as well, which is within these moves. All of this you can learn more inside the actual market structure playlist within the channel. So go through and watch that if you want to check that out. So that's the monthly time frame for silver. We are bullish. Let's now drop down to a weekly. Now, one thing I forgot to mention at the beginning of this video is this is all about using market structure, okay, and multiple time frames to make you a better trader, to make you understand market structure better. So again, the quickest and easiest way is to visually look at the chart. What do you see? A bullish movement. Even from this swing low, we continue to be bullish. Okay, a bit of sideways price action there, but we continue to be bullish. So very easy to spot. Don't overcomplicate your trading. You don't need to. And if we look at the current break of structure here, there's our current break of structure. We don't need to go back even further in time. This is then a pullback. This becomes my weak high. Looking for the market to want to run to. And I'll mark out this low as my strong low. Okay, so this will be my area of demand. Potentially we're inside demand now. We're inside imbalances. We're inside discount pricing. And we're just looking for price potentially shows a reversal to back up to run this high. That's what I'd be looking for. That could be the continuation on the monthly, and we don't actually get a monthly pullback, and we see a continuation on the weekly time frame. Very simple, very quick, very easy to read structure. You only need these 3 lines to do this. Don't clutter up your charts. You don't need to. Okay, and these candlesticks with the red and blue, if you're not sure, they're imbalanced candlesticks, and there is a playlist within this channel which goes through more detail on how to use these imbalances. If you want to check it out, I'll leave it linked above that. Let's now drop down to the daily time frame. So the daily time frame, let's do the same thing once again. We can identify we're bullish. Okay, we continue to be bullish here, and we're kind of like making a pullback here at the moment. Very quick, very easy to identify. Not looking for a trade right now. We're just identifying the bias on every time frame. So there is our last break of structure to the upside. That means this becomes my current week high, looking for price to run, and this becomes my strong low. That is my current trading range. We're putting back against that trading range. We have some imbalances in here where price has currently been holding at. Internally now, the structure is bearish again. It's kind of like we're bearish on the pullback, shifted bullish, and went back bearish. Very often, we don't see the market pull back below the 50%. Okay, or we did get back to 50% here, and then we went higher. There would have been a reversal entry here, it was a sweep, an entry here to go long. Target internally here, but then the market's pushed back lower. But if you're trading those lower time frames, a 4-hour, 15-minute entry, or even lower, you're not looking long term. You're looking for those quick in and out trades for 3, 4, 5 to 1 risk reward trades. So at the moment, we just mark out my last, close that one. So there's my last area of imbalance. Okay, price just touched that to the pip, and we're having a reaction, and we could just pull back inside this bearish imbalance and continue to fall lower for this imbalance below. Now if we reverse through this imbalance, this will show us a lower time frame reversal of structure, and you start to look to target this week high. So we're bullish at the moment on the daily, we're bullish on the weekly, and we're bullish on the monthly. What does that tell you? We are looking for buys. That is how we're using this. Now, if you want to go into more detail with this market structure, inside the new Novice to Pro Mastermind, there are already 4 modules being released to members inside the trading coaching experience to really dial down on this market structure technique and using the fractal structure, which I class as a fractal reversal, which helps you to identify quick entry points in the market. Now, if you want to check that out, I'll leave a link below in the description of this video, and I'll leave a link above now for the trading coaching experience. Let's now drop down to the 4-hour time frame. So on the 4-hour time frame, let's now just look at this visually. We have to zoom out a little bit now. So this was our bullish movement. We saw a reversal, went bearish, then we went bullish, and then currently we're bearish. Right, so how quickly we can identify this. So what we need to look at next is where does price turn from here to bullish to bearish? That's what we've got to look at. Let's just zoom into this current price. So where do we see the last push lower? We have a break of structure here to downside. So we're bearish on structure. We have this move down, which we only break structure here. That makes this our strong high. And then it's our low, weak low. But then we broke back to the upside. So the market has reversed structure here, back bullish. If we look closely, we had a quick pullback, another break of structure. And then we reverse back bearish once again. Market drops, pulls back. We break through structure again. And the market even has this small pullback. And we actually broke through. Just double check that. No, it's a sweep. So it's just a sweep. So the market then makes this low. We have to break through this high for a reversal back bullish, which we do. So we just now show you where we're looking at price. See how we broke lower. We pulled back. Okay, this wasn't a valid breakout. It's only a sweep, so we don't use this high. We broke lower again. This isn't a valid breakout, so we go to this low. We reverse structure with closing, pull back, broke higher, reverse lower, pull back. Okay, there's only a sweep here, then reverse structure here. But as there's no pullback, when we reverse this bit, we continue up until we get to this high. The market does pull back here and continue up. And then eventually when we pull back here, we only sweep this high. So have you followed along with this structure and how easy this is? So from this point, we can mark out another break. From this high, this would be just a sweep. Okay, so when we see this wick through, we're looking for the market to want to run this low and to push through it. Okay, so the market does this on low time frames, likely to show you. Now for a structural point, this is going to be my last break of structure. This is where I'm looking for a structure to break back bearish. So we go closer in. You can see the market has broken back bearish. We held, pulled back inside this area, and then we dropped through. So the structure point is from this low. I'll just quickly show you the markings. Up here, pulls back, continues up, pulls back, okay, fails to break out. So what this actually means is that we have from this low to this high, and then it's to this low. That's our swing structure. Now, all this other price action within is the internal structure, which you can learn more inside that market structure playlist within the channel. Now, I hope this makes sense. If there's anything you're not sure of though, please make sure you leave a comment below this video, ask those questions if there's anything you're not sure about. Now, we continue to be bearish here and we break structure again here. This is just a sweep, so there's a pullback to higher low and continue lower. This means this now becomes my weak low. So based on a 4 hour, and once you've done this, we don't need any of this old price action marking ups here. We can get rid of all this. We don't need it. Okay, nice and simple. This is our current trading range. This is our strong high, our weak low. There's our pullback. We can look for where our premium sits. Okay, premium discount, 50% area. Want to see the market pull back above into this area of imbalance, this area of supply. Okay, looking for another sell back for this week low. Now, if we were to see the market reversing through again, pulling back to new areas of demand, we can see a shift in structure, and we'll be seeing this on the higher time frames at those areas of demand on that daily and on that weekly on a reversal to higher for the weekly week high. This is how we look at market structure. Very quick, very easy, very simple. Now you can apply this to those lower time frames and look for different ways in entry techniques. But more of this, okay, was inside the trading coaching experience. Like I said, if you want to check that out, there'll be a link popping up in a moment. You can check it out. And if you want to continue to learn more about how you can use market structure to help you in your trading, make sure you watch the next video coming up. If not, go and watch one of those playlists. It's going to help you dramatically in your trading.